Hi there, welcome to Kneppy Invest and welcome to another ASX Daily Rundown video. My aim is to streamline these videos down to about 20 minutes or so. To do that and to not waste time, I actually have gone through some of the best performing companies, worst performing companies. I've also gone through some of the announcements and some of the companies I want to talk about. But before we have a look at the really good day on the ASX, everything looks like it's up over 1%. I think gold was up pretty big today as well. But before we do that, let's have a look at some of your comments. And I also want to talk about some of the companies you have mentioned in the comments. So let's go back 2 days ago to the 19th of March video, just to go through some of these comments. Now, the last comment that was written on this particular video was a really interesting comment. And to be honest with you, I have no idea what this particular viewer is talking about. This is from Alex Susie Savoy. Alec Yips. Kneppy, don't delete posters request. Now, I don't delete anything. The only thing I delete is spam. So on occasion, you might see some comments written in regards to Bitcoin, and then within 3 seconds of this comment, there will be another 20 or 30 comments saying someone's amazing, a Bitcoin investor is amazing, and this particular comment will have 50 likes or 50 thumbs up. I delete those comments. That's all I delete. So I'm not sure what you're talking about. Kneppy, don't delete posters request. If you did write a request in a comment section of a video, doesn't necessarily mean I actually read that particular comment. I miss a lot of comments. I don't go through every single video in every single comment. It shows your bad governance. No idea what you're talking about there. Reply to RFT class action. I went to RFT, here it is, RFT ComSec page. There's no mention of a class action here. I have not received any notification of a class action. I have seen nothing about class action. So I have no idea what you're talking about with this RFT class action. And if I don't reply to that, this person will fix action against me. I don't know what that means. Anyway, let's go on to something more interesting. So a couple of companies I want to comment in this comment section. Spartan Resources. Also want to mention MA Offshore. And also want to mention REIT. So let's start with REIT. I own Goodman Group. Now, some people refer to Goodman Group as a REIT. I don't. It's more than a REIT. Much, much more. In fact, one of the reasons I like Goodman Group is because of their exposure to data centers. Even though I don't own NextDC, I have been looking at it. I love the future or the potential of data centers when it comes to AI, that sort of thing. And that's why I do own Goodman Group. I did have a look at REITs, or I have had a look at REITs over the past 2 years, and I'm just not attracted to it personally. That's just me personally. REITs are at discount, and right now, I think most of them would be still at a discount. And if we do see a fair few interest rates cuts, more than likely, REITs is a place to be. So if people do start trading or getting into REITs, I could totally understand it. But more than likely, I will stick to Goodman Group, and that's it. I do find other opportunities out there. And in fact, talking about another opportunity, Spartan Resources. Now, there are a multitude of possibilities out there, potential trades out there, and you're not going to find every single one. And I miss Spartan Resources. I'm pretty sure this company is in a beautiful uptrend right now. It's a gold company. I'm not sure if it's a gold exploring or gold producing company, but the chart looks stunning right now. It's a beautiful looking chart. So 1 year ago, on the 9th of March 2023, share price of this company fell 37%. Share price was 10 cents. Share price now is 60 cents. So 1 year later, a six-bagger for those shareholders who have held during this period. So obviously the company has been releasing some really good announcements. I'm not sure what, because I've been not following this company. But it shows you, I completely miss Spartan Resources. And just because I've missed Spartan Resources doesn't mean the performance of my trading portfolio has not performed well. Because there's a lot of opportunities out there, and you're going to miss a lot of opportunities. Don't miss all of them, but you're going to miss a lot. So, yes, Spartan Resources chart looks absolutely amazing right now. Share price up 2.56% today. Pretty sure the gold companies had a really good day today. Let's have a look at WAF. One of my favorite. Western African Resources up 7.8%. And this chart looks really good now too. Looked really bearish for a while up until a couple of months ago, but it's starting to look really good right now. And I think if you have a look at a lot of gold companies' charts, most of them are starting to look really good. Not all of them, but a lot of them should. Northern Star, yeah, not as good. Bellevue, what's Bellevue? Is it BGL? Bellevue Gold? Oh, that looks pretty good. That looks pretty good. So you, even within a sector, you can find different opportunities. Some gold companies are probably not doing as well than other gold companies. Yeah, it's there's a plethora of possibilities or opportunities out there. Okay, so that's Spartan Resource. It looks pretty good. That's Alex Susie Savoy. No idea what you're talking about. Leave a comment in this video so I can understand what you're talking about. And the last company I want to talk about is MA Offshore. John Channel says, I'm thinking of buying MRM or MA Offshore as it seems to be a good uptrend. Yes, it's a brilliant uptrend. Is now a good time to buy or would I be getting in too late? Now, I can't give you individual advice. That's just the way it is. I can give it general advice, and the way I can give general advice is just by looking at the chart. So let's have a look at the chart, and I can tell you what I've done in the past with this company because I have a storied history with MA Offshore. In fact, I first started following MA Offshore way back in 2011 or 12, and there was a nice uptrend. This company is cyclical. So if you go back to between 2006 and 2013, this chart looks really good, doesn't it? It's a nice looking chart. Share price got up to a high of $24. Don't think the share price was $24. The company must have done some sort of share capitalization or something like that. And then the share price moved into a downtrend. Look at that downtrend. And that just shows you this company is cyclical. Now, one of the things I do like about MA Offshore is they're diversified their revenue streams. So they're less likely to be affected by cyclical reasons, but they will still be affected by any big shock to mining, that sort of thing. And it took this company a long time to get it out of the funk. And I had this company on my watch lists back here because the share price came out of the downtrend towards the end of 2020, started 2021. See share price going sideways. That's the first good sign. Now, still a little bit of volatility. I would prefer the share price to be going exactly sideways, but still a bit of volatility. And then I was waiting for the share price to get above about 48 cents. You can see this high in October 2021, and I was waiting for it to get above that level. And we started to see some good volume coming in. And the share price got above that level in February 2022, and that was the buy-in point for me. And the share price moved into a beautiful uptrend. And the uptrend has just not stopped. And the company has continued to release really good announcements. And you can see these really good announcements when the share price pops up. So let's go back to maybe the first pop-up, first significant pop-up, 9th of December 2022, share price on this day increased 21%. You had 3 weeks to get in on that particular opportunity here. Share price went sideways from the 19th of December through to the 1st of February. That's more than 3 weeks. Share price went sideways. That's a good sign. In fact, that's a really good sign. And then the share price hit the moving average channel. Look at that. Hit it on the 1st of February, and then the share price popped up. And the company also released something really good on the 15th of November, 2023. Share price popped up on that day by 13%. And that was another signal to get in. I bought back in. So I have bought and sold this company 3 times in the past. And each time I bought back in was at a higher price than when I previously sold. So that was a mistake on my part. I should have just maintained a position in this company. And if I bought in about 50 cents, this company would be a 5-bagger for me right now. Chart looks really good. Now, just because the chart looks really good, it's a beautiful uptrend, doesn't mean the share price won't go sideways for a while, or doesn't even mean the share price will pull back. So you could see a little pullback in the share price just before they released their half-year results. Share price went from about $2.12 down to $1.85, and that's okay. That's okay. But the share price looks brilliant right now. Or I should say the chart looks brilliant right now with MA Offshore. Is it too late to get into? No idea. I have no idea what the share price is going to be in 3 months' time. Well, 1 week's time, let alone 2 months, 3 months, 6 months. things are looking really good for the company and the chart, but just because things are looking really good right now doesn't mean the share price will continue to go higher. Potentially, share price right now at 240 is going to be a long-term high. Maybe the share price won't get back up to these levels for another 5 years. I don't know. But I'm just trading the chart and what I see right now, and it's looking pretty good right now. The other thing to note is this company is being mentioned more and more in podcasts. It's been written about a little bit more. So fund managers are becoming interested and more interested in this company. Okay, so that's comments from the 19th of March video. Let's have a look at a few comments that were written or written in yesterday's video. Some really nice comments. I appreciate what you wrote, Jack's Facts, and anyone who liked that or gave that particular comment a thumbs up. I'm not going to read these comments because they're just really good, really nice. You're just being too kind. Pretzel Pieces, a really good video, and your comment made me happy. Yeah. Let's read your comment. Love these videos, Kneppy. Not sure you're aware, but you're literally doing a public service. I don't know about that. You taught me how to read an Appendix 4C and the basics of how to read technicals. Now, these market rundowns are teaching me to be more familiar with and even interpret daily market movements. It is so appreciated. I never had people in my life speak openly about investing, let alone their methodology. Please keep doing what you do. You're changing lives out here. Thank you for that comment. I'm just going to say something maybe a little bit controversial and maybe it's a little bit cynical. One of the reasons I believe, and in my opinion, financial education should be taught in high school. It should be compulsory, but we don't do it. The reason we don't do it, and this is me being a little bit cyclical, is because the government doesn't want people to be financially literate. Financially literate. They want people to be financially illiterate because they want people to spend. If you're financially literate, you're less likely to spend your money. You're more likely to invest that money for the long term, so you could be much better off in the future. Now, I do believe you should spend some of your money now. So I'm not one of those fire people who thinks you should save all your money now and retire early. I believe you can have the best of both worlds. Spend some money now, but save and invest for the future. But in my opinion, the government doesn't want us to do that. The government wants us to spend as much money as we can. And the reason they want us to do that is because it's beneficial for the economy. Because 50% of GDP, might be even higher than that, is consumer spending. And the government wants GDP to increase over time. Because if it doesn't increase over time, that's bad for the economy. And more than likely, it's bad for their lives as politicians because they'll be voted out. So the government wants us to spend. And the best way to get us to spend is to spend on things we don't need, that sort of thing. Hence, they want us to be financially illiterate. Hence, we don't have any sort of financial education exposure in high schools. Now, maybe I'm being a little bit cynical, but it sort of makes sense if you think about it. So thank you for your comment, Pretzel Pieces. I think you're being maybe a little bit too kind, but that's okay. Thank you, K23. Great videos, Kneppy. Would you be willing to share what online broker you use? So I started with ComSec, and then I went to Self Wealth, and then I've gone to Superhero. Technically, I'm still can trade through all three. In fact, I have a margin loan in ComSec, which I don't use right now. If we see a massive, significant bear market, if we see the ASX get down to 4,500, I will use my margin loan right then, but I'm not going to use it now. The other thing is I want to see interest rates fall a fair bit from where they are. So I mostly trade through Superhero. I also trade a little bit through Self Wealth. Also have a superannuation account. And what I do, or what I'm doing now, or what I am going to do is put all my high quality companies in my super account and trade through Superhero because $5 fees trading ASX companies, 0 fees trading American companies. I think you can only trade American companies, and I really like 0 fee trading. That's just me. And Chris and Caroline, Clarity is continuing to move. Yes, it is. Let's not talk about Clarity right now because I wanted to buy Clarity Pharmaceuticals. It's sort of like a hedge against Telix because if Clarity is really successful what they're doing, Telix might be in trouble. So do a bit of research on Clarity and just see what they're trying to do, and then compare that to Telix Pharmaceuticals. And if Clarity succeeds, yeah, Telix could be in a little bit of trouble. But I'm not sure how much longer we have to wait before we get clarity around whether Clarity Pharmaceuticals is going to be successful with what they're doing. So I was thinking I'll just hedge just in case Clarity is successful, because I am a Telix Pharmaceuticals shareholder. But the share price is not pulling back. They had a really good day yesterday. Really good day yesterday. Share price rose 11%, and went to a new all-time high. So yeah, so go Clarity. We've not seen that pullback that I was waiting. And if I did see a pullback, I would have taken a small position in Clarity for the longer term. Now, Clarity is still a story stock, and that's my only negative thing about the company. They might not make it. It could be just a story right now. They might not succeed with what they're trying to do. But I think the market is becoming more excited about what this company is trying to do. That's why the share price is an uptrend, and the market cap of the company is $700 million. Okay, so that's all the comments I want to talk about that you have left. Now let's have a look at the market. Yes, let's have a look at how the market performed today. It was a good day, a great day. Our portfolios should have had a beautiful day today. Everything was up. Small odds up 1.92%. I'd love to see small caps doing well. Resources up 1%. Now let's have a look at sectors. I'm assuming not all sectors was up. I don't know what would be down. Let's have a look. Healthcare down a slight bit, 0.2%, and utilities down 0.6%. I don't own many utilities, if any at all. I do own a few healthcare companies. Financials had a good day. That's great. I own some banks. And gold up 3.8%. That's brilliant, which is not a shock because West African, I'm pretty sure West African had a really good day today. Yeah, up 7.8%. Beautiful chart. Many beautiful charts for gold companies. A lot of them look pretty good, but you will be seeing a lot of really good and maybe even breakouts. This is gold chart right now. It's a beautiful chart. A little bit of a pause in gold prices for about 6 or 7 trading days. That's very healthy. It's like a flag or pennant. And that shows you this taking a breath. And that's a bullish sign. And then we've just seen it break out the last 2 days. Not sure why gold had a really bad day on the ASX yesterday. That's strange. And uranium had a good day today as well, up 3.2%. Everything had a good day today, looks like. Bitcoin was up. Where is it? Up 9.6% after being down 8.5% the previous day. So a lot of volatility in Bitcoin right now, but this video is not about Bitcoin. Just saw it there. It was down a little bit, but it was up a heap yesterday. Okay, so a really good day on the markets today, unless you all your investments were in utilities. But if your investments were in gold, you had an absolutely stellar day. Now, let's have a look at some announcements. Now, I want to streamline this a little bit more, so I'm not going to go through all these, but today was really good because we had a few companies report. Fonterra shareholders fund, strong profit and dividend for financial year 24, interim results, share price down a little bit. Brickworks released their half-year report or results. At the same time, when Brickworks released their results, you're going to see Soul Pattinson release their results, and they did. Now, let's see how the market reacted to Brickworks results. Down 3%. Is this a buying opportunity in regards to Brickworks? I do like Brickworks as a long-term hold. This is the weekly chart for Brickworks. It's a beautiful chart over the long-term period. So there's the uptrend. A daily chart probably looks pretty good as well. A little bit of a correction in the share price. Some buying did come in during the day. Share price actually went to a low of about $28, $28.31 and closed at, right there. It went to a low of $27.83 and closed at $28.31. So there's a little bit of buying coming in today. Share price has pulled back over the last 2 or 3 weeks from $31 to $28.31. So maybe this is an opportunity to get in a Brickworks at a lower price, because if you hold this company for the next 5 or 10 years, more than likely share price is going to be higher. And the company has increased their dividends, if I remember correctly, the last 10 years. Now, Soul Pattinson is another high-quality company. Now, I'm not a shareholder of either company, which is funny enough. Now, interesting enough, I do find Washington H. Soul Pattinson to be way more volatile than Brickworks, and this sort of confirms my thoughts. A lot of volatility in here. You can see this company is market darling for a little bit for periods of time, and the share price takes a massive plunge. Market darling, massive plunge, and right now it's in the middle of a nice little bull run. Share price is not an all-time high. All-time high is around $41, and share price of this company is 35. P ratio is about 16.9. You can buy this company at times at a really good price. And last time we saw that was in June 2022. And I still remember that, and I think, oh man, this looks really good. I should take position in this company, and I didn't. I don't know why, but I didn't. So without even looking at the results, how did the market fare? Washington Soul Patterson results. Let's have a look. Where is it? There it is. Up 0.43%. So sort of a muted response. A little bit more negative when it comes to Brickworks. Another company, a fairly small company, released the type of announcement I'm always looking for, and that company is BOL Logistics. At 8:26 a.m., boom, updates financial year 24 guidance, NPAT to exceed 6 million. This was a slight profit upgrade. So previous guidance, they expected profit to be 5.5 million. Now they expect profit to be 6 million. So it is a profit upgrade. They also increased revenue expectations. This is a sort of announcement I'm looking for. Profit upgrades. Typically, profit upgrades can lead to a breakout in the share price. The whole point of me doing these videos and doing this process is to look for breakouts. So let's have a look at BOL Boom Logistics. Share price increased 7.41%. Market cap 57 million. So this is a small cap company, but it is profitable. $6 million. So this company has a P ratio less than 10 right now, and price of 14.5 cents. But is this a breakout? Let's have a look at the chart for Boom Logistics. Now, I'm not the biggest fan of this company, but I have to keep that bias out of it. If I see a breakout on the chart, I might take a position in this company. So this is a weekly chart. I want to look at the daily chart though. Okay, so share price had been a long-term downtrend, maybe not long-term downtrend from start of 2022. Share price has moved from 21.5 cents down to a low of 10.5 cents. So share price has halved over almost a 2-year period, but it looks like maybe that downtrend has come to an end. Now, the volume today was good. And funny enough, this company had really good volume in late August, around the time the company released their results. And that sort of signified the bottom might have been reached. It took a while for the share price to start moving up, but it has started to move up. And the share price at 14.5 cents is equal to the highs we saw back on the 23rd of February and equal to when we saw the share price at this level back in March 2023. So we are at a 1-year high for this company. And good volume coming through today, not as high as we saw in August, but still some good volume. Is this a breakout? Is this a potential buy? I don't know. It is a potential buy. This is a potential breakout. We had the positive financial news, profit upgrade. Share price is at least a 6-month high, will equal to the highs we saw about a month ago, and some good volume coming in. So we do get quite a few ticks. My only problem is just my bias, my negativity around this company, but maybe that is harmful to taking advantage of a possible run in this company's share price. Now, if you look at the weekly chart for this company, it's ugly. It's an ugly weekly chart. So, but you have seen on occasion the share price of this company going on runs. So if you bought at the bottom here, there might have been a breakout on the 30th of May. Let's have a look at the daily chart. And let's go back to 2016 to see if there was a breakout and could we have taken advantage of that. I said May, it was around May. Look, share price increased 11% and then 15% in consecutive days on okay volume. And then the share price went into a long-term uptrend. Share price, you could have bought, say, at maybe 8 cents, we'll say 8 cents, and then sold as high as 27 cents. So, yeah. So just because it's a bad company, not the highest quality company, doesn't mean there's not opportunity out there. This could be the opportunity for Boom Logistics for a short to medium term trade. I don't know. So maybe I should take a small position. Maybe I should. I don't know. Okay, another company that released their results was Sigma Pharmaceuticals. or Sigma Healthcare, the results were pretty bad, as you would expect. But the people buying this company aren't buying it because they like Sigma Healthcare. They like this. They're buying shares in this company because they like Chemist Warehouse. I have no idea if that particular acquisition is going to go ahead, and the share price $1.23, and you can just see how much the market loves Chemist Warehouse by just looking at the chart. For those who don't know, there is going to be sort of a merger between Sigma Healthcare and Chemist Warehouse, but it's not an equal merger or mergers of equals. It's going to be sort of like a reverse takeover. And have a look at the results of this company. Have a look at the revenue this company generated, then have a look at the profit. This company exists in its current form on really low margins. In my mind, that's not a high quality company, but yeah, the share price is in an uptrend right now, and the market just loves Chemist Warehouse. That's the only reason the share price is in this uptrend. I am staying out of Sigma Healthcare right now. The last announcement I want to talk about is Electro Optics. Went into a trading halt at 9:17 a.m. for a capital raising. So I'm pretty sure it's a placement and share purchase plan. I have two minds about this one. I sort of understand what the management is doing because the share price is doubled in a fairly short period of time. The share price was $1 on the 29th of January, so less than 2 months ago. Now the share price is above $2. The share price has doubled in less than 2 months. And I have said and mentioned in these videos before, the best time for management to do a capital raising is when the share price goes on a run like this. So the management can get better value out of the capital raising. You don't want to see management do a capital raising when the share price has decreased 50%. That is the worst capital raising. But my only concern is the capital raising is going to be at a significant discount, and it's going to stop the momentum in the share price. So possibly, because I am trading this company and I also have a longer term position. In fact, that longer term position, about 600 shares, I've held that 600 shares for about 7 years. I took profits, and the result of those profits, well, they're not the result, but I decided when the share price got above $10, I'm going to maintain a holding of 600 shares. So when the share price gets to $10, that 600 shares was worth $6,000. So maybe I should take it more off the table. But I am going to maintain 600 shares no matter what in this company because I've always held 600 shares in this company. Not always, but for the last 7 years. But I am trading shares in this company, and I am thinking as soon as the shares are back in trading, but I want to see the capital raising. Maybe the capital raising is at a premium. I doubt it. I think they're raising $40 million, and I'm interested to see why they're doing it because they have a fair bit of cash on hand. Last time I looked, they had about $70 million of cash on hand. So why are they raising $40 million? I think they might have mentioned they're doing it. Did they mention why they're doing it? Let me just have a look. I don't think they mentioned in this, but I have a feeling they need to raise money, capital, to produce or manufacture all these orders coming in. That's not necessarily a bad thing, but that just shows you the red flags in regards to this company, that they're highly capital intensive. They need a lot of money to satisfy all their orders, all their clients. So that is a red flag. But I just want further clarification from the company in regards to why they're doing this capital raising. I thought they did mention in the announcement, but I'm completely missing it if they did. Anyway, so that's all I want to talk about in regards to announcements. Now let's have a look at the best performing companies and the worst performing companies on the market today. Cockle was the best performing company. I'm pretty sure this company did release something today. Yeah, Cockle secures 12-month revenue stream by chartering barges. So all I want to do is to see if this was a breakout. That's all I want to see. Is this a breakout? No. Share price in a downtrend. I'm not interested in this particular announcement at all. Another company, let's go back. Some of these other ones I don't really interested in. Low volume, not much turnover. This is by change or share price change. Namoi Cotton, I believe this might be a takeover. Could be wrong. Major receipt of non-binding indicative offer from Alarm Agri. So it looks like this is a takeover. So let's go past that one. I'm not interested in takeovers. Let's go by market cap. Webjet did release a presentation today. Bellevue Gold had a good day. Zip, another brilliant day. Let's have a look at Zip. There was a comment about Zip. Did I talk about Zip earlier? I can't remember. I don't think I did. Can you please do an update chart on Zip? So let's do that. Let's do an update chart on Zip because it did really well today. Zip. Sorry, John, about leaving this reply to your comment really late. What was the comment again? Can you please do an update chart on Zip and where you think it's heading? I have no idea where it's heading. If I had to take a guess, it's moving up because that's the trend. The trend is up. The things I like about Zip, volume. So one of the reasons why I bought a position in Zip at 55 cents was the increase in volume. Then I took profits at $1.25, and then I bought back in at $1.28 because I thought the share price would dip back. It didn't. It came not obvious to me, but it became clear the share price was trading in a range. The bottom of that range was about $1.20. I just bought $1.28. I just couldn't not hold these shares in this company because a lot of other things were pointing towards the share price wanting to go higher. It broke out. Share price broke out on the 18th of March. Let's have a look at the 15-minute chart. Share price broke out. You can see it breaking out early on the 18th of March. Share price then went sideways, and it's still going up. So the 15-minute chart looks pretty bullish right now. The daily chart looks bullish. I have no idea how much higher the share price is going to go from here. This could be the high, but it does look pretty bullish. And the thing that really confirms my bullishness is just the increase in volume. So if you just zoom out a little bit, you can see the massive increase in volume compared to what we saw during 2023. Now, during 2023, the share price of this company was drifting lower. And the reason why it's drifting lower is because there's no interest in the market around Zip. No interest. Low volume, share price drifts lower. To see the share price increase, we need to see the market interested. The way you see the market interested is increased volume. We started to see a shift in sentiment and a change in trend when volume started to increase. There is a link between volume and share price. Never forget that. And you can definitely see it by looking at the weekly chart. So look at the weekly chart. Low volume during this period. Just ignore this increase in volume during July 2022. That was in regards to a false breakout. So decreased volume, low volume, up until we started to see volume increasing. And the volume has continued to increase. That has me just as interested in Zip right now as I was when I initially bought it 55 cents, even though I have taken profits once. So it doesn't mean I won't take profits again tomorrow, but the really good volume just makes me think that there's a lot of excitement about this company. And the other thing I saw was Hot Copper. This is the most talked about company on Hot Copper right now. Now, that is sort of like a two-edged sword. It's good that the market is interested, but a lot of times I don't like it when a company is the most talked about company on Hot Copper. There's just maybe too much interest, and maybe there's a lot of day traders in this right now. And when you see too many day traders, that can lead to increased volatility. So you see the share price going up and falling back by a fair bit, sort of like what's happening with Appen right now. And I'm pretty sure Appen had a pretty bad day today. So I don't want to see this company affected too much by day traders. But I do think there's quite a few retail investors in there right now. And I think even fund managers might be getting excited about Zip. So I am bullish on Zip right now, but my thoughts on a company can change within 24 hours, even within 12 hours, even within a few hours by a simple one-day candlestick. That is all it can take. Okay, step one had a good day. Yes, step one. I'm glad I maintained my position in that company. Market cap of step one is now 352 million. And BrainChip, another good day, but they're quite volatile. Yeah, so that's all I'm going to talk about when it comes to top gainers. Let's have a look at the worst performing companies on the ASX today. There are a few companies here I want to talk about. I've already gone through this, by the way, so I know some of the answers to this. Okay, there's a company called Q Energy, down 14.8%. Share price closed at 9.8 cents. That company went ex-dividend. I thought the share price might fall a little bit more than or to 9.8 cents. I wouldn't be surprised if the share price was significantly lower. I hate when it logs you out. So Q Energy open at 8.3 cents. That's the dividend seekers going, I've got my dividend, I'm going to sell on the open. And this is sort of the reason why you maybe not sell on open. You miss out a fair bit of capital gain. You could have sold your dividends or towards the end of trading today at 9.8 cents and got your dividends. So I don't like, not necessarily a big fan on selling on open just because you got your dividends. And that's what people did today. They sold at a dividend with 2 cents. So the share price fell 3.2 cents. So you're selling, you're getting a 2-cent dividend, but you're willing to sell your shares at a 3.2 cents discount to what the share price was the other day. That's the problem with being overly reliant or overly obsessed with dividends. You make irrational decisions. Now, maybe it's something to do with franking credits, but something like that. But you could have sold at 9.8 cents. So, yeah. So whenever I see a company go ex-dividend, I never sell on open. Never, ever. Because you see this happen a lot. I should have been paying attention because I might have bought back in at 8.3 cents. And that would have been a good move because I was holding this company. And then I sold at 11 cents. And I thought, I'll get back in when they go ex-dividend. And today was that day. I completely forgot. I should have written it down somewhere. That's the reasons why when you have a bad memory, you should write things down. Otherwise, and I wanted this video to be 20 minutes long. It's not going to be 20 minutes long. And otherwise, nothing else here. But if we look at the market cap, we ignore some of these companies because low turnover. Appen, down 9.7%. So let's have a look at the chart for Appen. And this is just a plaything for day traders at the moment. So this is the daily chart. Let's have a look at the 15-minute chart. I will not be surprised if day traders are getting out en masse. It's in a downtrend, medium-term, short-term downtrend. No interest in trading this company at all. Yeah, so if we start to see it bounce off at some level, then I might become interested in day trading this, but more than likely not. No. Another company I saw here that was down big again today was Clover Corporation. A company released their half-year results yesterday, down big and down big again. And sometimes you do see that when a company releases a negative report, the company share price can go down over successive days, and another bad day for Clover Corporation. And another reason why sometimes I'm willing to sell when a company releases some bad results, because this is what happens, and it can be the start of a long-term downtrend. And there's a possibility Clover Corporation share price might be significantly lower than 58 cents in the next 6 months, because this could be the catalyst for a re-rating and a bad re-rating in the share price. I'm going to show you two charts. I think I might do this in every video. The first one is Digger Data. I bought Digger Data shares 2 weeks ago, and I said, I'm going to give Digger Data 2 weeks. And in 2 weeks, I'm going to sell shares. And today was that day. So I bought at 10.88 on the Wednesday, it would have been Thursday, the 7th of March. That was 2 weeks ago. And I was going to sell my shares in Digger Data today, 2 weeks. And then Digger Data had an okay day, up 2.65%. And one of the reasons I was going to sell, apart from me saying I'm going to sell in 2 weeks, is because I didn't see much motion, not much excitement in the shares in this company until today. Today was the first time we've seen a little bit of excitement. Now, I did think the market overreacted when the CEO sold his shares. He sold it for a reason, and I fully expected a bounce in the share price. I just didn't see the bounce until possibly today. Maybe today is the start of the bounce for Digger Data. And if we continue to see the share price rise, I will sell when the share price gets to 10%, 11, so about $12. Between $11.80 and $12 is my target. Now, I don't like having a target, but in this case, I do have a target. And the last chart I want to show you is Judo Capital. I'm hoping this company had a bounce. Yes, it had a bounce. So I bought Judo Capital at $1.16 on the breakout. Now, this was not a traditional my traditional breakout, because it was not not a 6-month high. It was very close to a 6-month high. Share price increased on high volume on the 23rd of January, and it was a good announcement from the company. I bought 3 or 4 days later, $1.16 and 5 cents. The share price went sideways for a while. In fact, some periods during the next 3 or 4 weeks, share price was lower than what I bought, but I held firm, being patient. And the share price, whenever it got into the green zone, sort of the support zone, we saw some buying coming in. And then the share price started to go higher as soon as the share price got towards this moving average channel. And then we saw a few good days in a row between the 7th and the 11th of March, and then a little pullback. And what happened as soon as share price moved back into this moving average channel? We've seen a bounce. That's what I expected today because we saw the first signs yesterday. So I did expect a bounce in the share price of Judo Capital. And because financials had a good day, I just expected Judo Capital to have a good day. So this is just a little buy the dip situation. Share price hit a support level and now is bouncing up higher. And I want to see the share price get above $1.45. That would mean a higher high. So that's all I'm going to show you in today's video. This video went a little bit longer than I wanted, but I am going to continue streamlining these videos, make them more efficient, and hopefully be able to record these videos in 20 minutes. If you have any thoughts, any questions for my next video, now tomorrow's video might be late. I have done a swap with a colleague. I'm doing his shift, but I'll be doing it working from home. And more than likely, during my lunch break, I'm going to mow the lawn. So anyway, leave a question in the comment section of this video and answer that question either tomorrow or next Monday. And last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.